welcome on board Rajat Sharma, who's joining us on the show right now to help us try to decode what's looking good in the markets right now. Hi Rajat, good afternoon and great to be speaking with you. And Rajat, believe that you continue to hold that constructive view on the markets, especially the Indian markets, but in the long term. So help us understand that which themes are looking good to you right now. What is that you're bullish on?
Good afternoon. Yes, in terms of themes, clearly, it's almost a given that next week there will be a rate cut in the MPC's meeting. So banking, of course, is one sector that I've been bullish on for a very long time because private banking in particular has already anyways been trading fairly cheap compared to a lot of the other pockets of the market. And with RBI's meeting next week, with where inflation is, it's a given that there would be a 25 bips rate cut. So that would be an additional benefit which the banking sector will get. But I think the major reason why I'm bullish on banking, in particular private banking, is because the union budget that we had this year, which increased the tax slabs and made income up to 12 lakhs tax free. The benefit of that you will start seeing from the financial year 26, which is the financial year which has just started. So while a lot of people are talking about consumption spending going up and discretionary spending going up, clear beneficiary, the first beneficiary and the biggest beneficiary of this new tax policy would be banking, because that's where money will come in the first place. So if you talk about things that are working for the bank, the tax policies or the new tax structure is really favorable. Repo rate will be revised to 5.7%, 5.75%, so more money in the hands of the banks. And over the last 2-3 years also, tax policies have been changed in such a way that a lot of the advantages given to mutual funds where people were taking their money from banks, particularly debt mutual funds, which got indexation benefit and 20% tax rate post that, all of that has been taken away. So gradually, a lot of policies have started favoring banking, and I really like private banking. The top picks I have in that sector would be, clearly HDFC Bank and Axis Bank, which also, by the way, get a lot of their revenue from non-interest income, another area of banking which I'm really positive on. I think HDFC and Axis both get about 18 to 19% of their total income from, fee-based income, distribution of third-party products, mutual funds, the AMC business. And the other bank I'm bullish on is Federal Bank. So these three banks, and clearly, a week before the MPC meeting, banking is definitely one sector which I'm really bullish on, and bullish on for the next 3, 4, 5 year kind of perspective. India still remains an underbanked country.
Okay. Hi, Rajat. This is Kanishka also joining in. I also want to take your view on the IT sector. Do you continue to be optimistic on that one? And also, how do you see Indian IT companies navigating the whole AI transition play?
Yeah, sure. If you look at the history of Indian IT sector, it always trails the US IT, whatever happens there, both in terms of development and adoption to new technology, whether it was digital around a decade back or it's AI now, and also in terms of earnings and valuations. So while US tech companies have run up a lot in the last 1 year or so, Indian tech has been struggling mainly because there was a negative sentiment around Indian IT companies still relying on cloud and digital, and basically the legacy business of programming and not really adopting to the AI revolution. In fact, because of AI, there was a lot of job cuts, which we saw at Infosys and stuff. So, my view is that also they got affected because there was a curtailed spending in the US on fears of a recession in US markets on account of Trump's tariffs policies or whatever. Now, US and European companies have started spending more, a trend which we've started seeing. And given where Indian IT companies are, the large IT companies, Infosys and TCS and, Coforge and Emphasis, I think a lot of these companies will benefit from increased spending in the US. So their valuations would, I was looking at Infosys, the dividend yield is almost close to 2.75%. For tech companies to be trading at 22, 24 kind of price to earnings multiple is a very attractive level to buy. These companies are not going anywhere. They are were and will always be part of the core portfolio in India. They will be part of Nifty for all times to come. I believe a lot of these large tech companies. So this is one sector which from valuation perspective is really, really attractive. And things should turn around for them given that, the whole tariff business is behind us and there's no fear of a recession in the US as much as there was some time back.
All right, take your point on the IT space, but Rajat, the two themes that have been the flavor of the market in the month gone by, one was the defense pack, wherein just after the recent tensions across the border, we have seen all these defense companies doing well. And along with that, the real estate pack has been doing well, though on the number front, the numbers were not that great. But from the April lows, if you see, the stocks have given a double-digit return. So give us a sense, one, on do you believe that these can continue to be the flavor of the market in a couple of months ahead as well? And second, are the valuations comfortable and are they trading in a decent zone?
So, let's take them one by one. So when you talk of defense, and the moment you say flavor of the month, you know that that's about, or that should at some point die, right? Flavor of the month is for a month, 2 months, a quarter, but a flavor of the month cannot be a sustainable. Now, I don't for one doubt that defense companies are strategically important for India. We are in a time where we're seeing increasing hostilities in the world. And, stocks like Bharat Electronics, which, our radars really saved us with this war. So these companies are great companies, but let's talk about valuations and let's not get carried away with, wars or skirmishes. These companies are trading at very expensive valuations. Will they continue to trade at expensive valuations for a while? Sure, they could, because, the sentiment is so much in their favor. But are they value buys? Would you like to buy them at these prices and hold them for, the next 2-3? My sense is you'll get these stocks at a price cheaper than the prices at which they are available right now. Talking of real estate, again, extremely stretched valuations. You look at DLF, Prestige Realty, the Lodha Group, and most of these companies, something very interesting is happening. When I talk to investors in real estate in the market, they feel prices have run up a lot. Like real estate prices are zooming, and the house prices and excluding Bombay where there's a slowdown, but in Delhi, NCR region, Bangalore, Hyderabad, a lot of these house prices are going through the roof, but a lot of that is not being reflected in the balance sheets of these companies. So valuations have stretched. I don't know why, because house prices are really, really robust. They're selling, prices are going up, but the money is not being reflected on the balance sheet. So take a guess where it's going. These are cyclical businesses. Real estate in their peak cycles always run on very, very high valuations, but all of that has already played out for a lot of these large cap real estate companies. From here, do these companies have the legs to keep running higher and higher? Maybe another 2 quarters, I would believe, but that's not on account of fundamentals as reflected in their balance sheets, but more on sentiment, I would believe. So it does not fit in my scheme of things. So this is not a sector where I am initiating or looking to buy anything more.
Okay. So you see valuation stretch for both the defense and real estate pack. But apart from that, Rajat, I also want to take your view on the consumption space. How do you, see this space shaping up, given the kind of government push that we are seeing to, increase consumption and also the early monsoon that has set in? So where do you see, do you expect any kind of growth momentum going forward for this space? And within this space, are there any particular pockets where you find more value?
Yeah, no, this is a very, very interesting question because, we were looking at consumption and consumption. A lot of the stocks that I was looking at, particularly, consumption is a very, very large area. There's consumer discretionaries like, Voltas and all. But I was specifically looking at FMCG where valuations have still not come down, but that's largely on account of extreme margin pressure. So the revenues are not growing, whether you talk about HUL or Asian Paints or Nestle or and, I was trying to understand why that is. So we started looking at a host of factors and we realized that quick commerce is the reason why a lot of these FMCG, the companies that sell 20, 30, 40, 100 rupee items like soaps and ice creams and biscuits and bread, butter, coffee, these kind of companies, there's the reason why rural demand is not slowing down, but urban demand is slowing down is because quick commerce has allowed a lot of these new players to come in the market earlier. Whether you'd go to a Nature's Basket or a Modern Bazaar or any Kirana store, you'll see there would be a rack for coffees and there would be Nescafe and Brew, or there would be one more brand. Today, people who are buying on Blinkit and online, so maybe Eternal, this is good news for, because people who are buying on these online platforms, it's like a shop. Type the word coffee and you see 20, 30, 50 kinds of coffees. I have myself tried some 10, 12 different kinds of ice creams in the last 2 months. So of course, stocks like HUL and Britannia and Nestle or Marico, which sells hair oil, there's so many kinds of coconut oils which you can buy online. And this is likely to stay. So this margin pressure is likely to continue unless some of these larger players buy out some of these brands on, your Blinkits of the world and take them under their umbrella and sell it as theirs, which could take a while. So, I am positive that stocks like HUL would eventually do well when they figure out how to deal with this quick commerce game, but that's a while away. So while we were doing this research, when I said, let's look at all these stocks, I figured 2 stocks which are not impacted in FMCG with this quick commerce. One is cigarettes and the other is alcohol. Now I don't drink now, but I do invest in alcohol companies, and I think these 2 things will never be sold on Blinkit, right? Because the government regulation will not allow it. So both stocks are available at decent valuations. I suggested adding these 2 stocks to our client portfolios. And ITC in particular, after yesterday's correction because of the bad news of selling some 2.3% stake, has become even more attractive. I think if this whole BAT issue is behind us, the stocks should trade far higher. You have America with a population of 34 crores with 3 large cigarette companies. You have India with 144 crores, increasing number of smokers and 1 monopoly. 4 out of 5 cigarettes sold by ITC. I mean, it's the market. So, these are the stocks in FMCG that I really like.
Correct. So those are the plays that you like in the consumption space. But just one last question I want to take with you. You've talked about how valuations are stretched in the defense and real estate baskets. But apart from that, do you see risks in any particular sectors, and you think investors must avoid and steer clear of?
Yeah, from time to time, there are these sectors which get really overheated and everybody wants to buy something in that sector. Personally, I think PSUs are still, since they corrected a little from the top, everybody is like jumping on to buy PSU stocks, not realizing that they're still far, far more expensive than where, you have power generation stocks like SJVN and NHPC, which used to 4-5 years ago traded 24-25 rupees. They ran up to 150, 160 for SJVN. Today it's trading at 100, 120. It's not like it's become very cheap, but just that it's fallen from its peak. But I still, so people find it attractive, but I still think the whole world is not getting into solar and hydro so soon. So still very, very expensive. So PSU, a lot of these government power stocks and PSU themed stocks, excluding banking, a lot of these PSU stocks, defense stocks, real estate stocks, I find these to be expensive.
Great, Rajat. Thank you so much for joining us and helping us decoding the current market mood, and also telling us about the sectors that you're bullish on and investors must avoid at this point. Thank you so much for joining us. Great chatting with you.
Thank you.
If you like this video, then like, share and subscribe to ET Now.